Good afternoon, everybody. This is the final trading day of July. It's July 31st, and you're watching MarketStream.live, the closing bell. My name is Joseph Cusick from the Cusick Group, and behind me, I've asked this question this morning. I'm going to ask this every day until I start getting a valid response back from everybody. Can your advisor, with a 95% probability, tell you what your portfolio, worst case scenario, best case scenario, could do? If they cannot, you need to contact me at this email address, jcusick@moneyblock.com. jcusick@moneyblock.com. We'll set up a completely, no obligation, free portfolio review. All you simply have to do is just give me your holdings that's currently in your portfolio. I'll plug them into my platform, and I will tell you with a 95% probability what's your downside risk potential and what's your upside risk potential, again, for the next 6 months. So we can get through this as the world turns type of soap opera that's coming out of Washington. You're not going to have any sleepless nights wondering what's going on with your portfolio. Now, with that being said, let's take a look at all of the closing action that transpired today, because we definitely had a mixed market. We start the overview today taking a look at the Dow Jones, and the Dow Jones has been the leader. At this juncture, you saw that it finished up the industrial at 21,891. What's notable here is the likes of Boeing, which has just been screaming to the upside. Ticker symbol BA. Price targets being moved up by analysts. Bottom line is that you're seeing, with the weakness in the dollar and just this huge bounce here, bottom line is that this is one of many of the 30 stocks that has continued to drive this indice to new highs. With that being said, you can see that there's been a very big notable grind. Now, again, you're going to have to dig a little deeper. Haven't seen any huge catalyst to the Boeing move, except for the fact that, some solid numbers coming out, some potentially large contracts. And again, the defense sector and segment of the economy has not really shaped up. We don't know what the Trump administration is going to do going forward, but names like Boeing have been a catalyst to the upside. Now, taking a look at the S&P 500, this lagged its larger cap brethren on the Dow 30. This is 500 stocks that are considered large caps, and finished down $1.80 today, as you can see. 24.70, really just kind of one of those lumbering trades right now. Of course, with the headlines out of the White House, as I had mentioned, the soap opera continues in Washington. The White House Communications Director, now former Communications Director, the Mooch, Scaramucci, he resigned, forced out, whatever it is. Bottom line is that John Kelly, who is basically now running the show, seems to be cleaning shop. The political uncertainty that continues, and infighting and everything else, and the communication smorgasbord that continues to go on there is still going. Markets really don't care, but the S&Ps are kind of stalling right here. And one of the notable reasons why is large cap tech, Apple, will be reporting tomorrow. Now, taking a look at Apple as we are going through this, what's notable here? What should you expect? Well, first of all, Apple has been trading to the downside. Tech has been under pressure, and specifically large cap tech. We'll talk about that, but Apple is also a good sized component of the S&P 500 as well as the NASDAQ. And right now, Apple is running in an implied volatility rank of 88. For those of you that this is the first time that you've ever watched my show, shame on you. You should be watching us every day. But no, thank you for watching us. The implied volatility rank gives us an indication of whether or not the marketplace, specifically the options marketplace, thinks that the stock could move very violently, or if the trend is currently just going to the upside, doesn't expect a big violent move. If it's low implied volatility rank, not a big violent move expected. If it's a high implied volatility rank, there's an expectation of a pretty large move. And right now, Apple has an implied volatility rank on a scale of 0 to 100 at 88. That's high, folks. There's an expectation that Apple could move. Now, it's been moving in advance of earnings, which are going to be tomorrow, and specifically they're pricing in a $4.63 or $4.86 move into the underlying. To put this in context, this is a $148 stock. So you're basically seeing about a 3% move being priced in at this juncture in Apple. Already was down 77 cents, up 2 cents post-market, but there is a big battle. When it's between the 20 and 50-day moving average, folks, that's what I use for trend analysis, just to give me an idea or perspective of who is in charge. And right now, the bulls, they're on their heels in Apple. We're going to watch this one very closely. This could start to show a little bit of, maybe at least at the bare minimum, a little bit of a sector rotation, which we saw a taste of today, where tech was out of favor and the likes of Google and Facebook being the most notable ones, as well as Apple. Let's take a look at that. Google down 1283 and Facebook down right now 320. So you're seeing large cap tech scaling to the downside. What's interesting though is you're not seeing volatility move batting an eyelash, but that doesn't matter at this juncture. What you did see though was a rotation out of these large cap tech names, which by the way, the market has been riding on their backs to the upside. You saw some move in finance. So if you take a look at XLF, you saw that it was up 18 cents. So you saw some of the banks. What's notable is you see this green line here. This green line is the US dollar. The dollar has been tanking. Interest rates also have been starting to uptick, but still, if you look at the 10-year at 2.3%, not enough of a catalyst for me to say that financials are really going to start to gain a lot more traction than they have. They're stuck in this little consolidation at this juncture, but still above its 20 and 50-day moving average. That's a positive, though, for the markets to see finance. You're also seeing a recovery in energy. Take a look at XLE. XLE is the ETF that tracks the energy markets, up 15 cents. But you're seeing that bounce in crude oil that we'll talk about a little bit. But you're seeing the likes of XOM, ExxonMobil, that was up 44 cents today. You're also seeing CVX, Chevron up as well, moving to the upside, $1.09. So these are positive moves in the energy sector. That's another one. Might be a little bit more defensive, as well as these are sectors that have been lagging the moves in the large cap tech names as well. And then you're also seeing utilities. With the inability for the bond markets to make a move either way with conviction, either bond prices coming down and rates going up, or vice versa, yields coming down and bond prices going up with a definable correct conviction, you're seeing that utilities bounced a little bit, up ever so slightly, 0.3%, but staying above the 20 and 50-day moving average, which means that there are some yield hounds out there, individuals that want to look at yield components or maybe a little safety in their portfolio. They're looking at utilities today. So a little bit of a rotation out of high flying large cap tech names and moving into these sectors. Now, another reason why you could see a movement into these sectors was because of the fact, and we've already talked quite a bit about tech, but you could see that the NASDAQ was down 28 points on the NASDAQ 100, good for about 4.48%. But you also saw that there was a pretty decent sized miss on the Chicago PMI. Or I would say a disappointment versus June. June had a PMI of 65.7, which is extremely bullish as far as purchasing managers looking out and saying they're thinking that there's going to be some potentially aggressive upside. Came in at 58.9, so a pretty significant drop in the PMI. Now, what's notable though, folks, is anything north of 50, and especially when you get to the mid to upper level, 50 levels into the 60s, that's showing that there is a lot of growth potential, though, being forecast. So I don't want to paint this as an ugly, totally horrible picture, because this is pretty solid. But with this big of a drop, we want to watch these PMIs going forward, because this is going to give us an indication 3, 6, 9 months out what we're potentially looking at on landscape. If you see this go from 65 in June down to the mid to low 50s in August and September, that's not a huge vote of confidence as far as continuation of growth trajectory by purchasing managers. The Russell 2000 started to fall off towards the tail end of the day, down 4 points. We're going to watch that one very closely. The crude markets continue to move to the upside with conviction. You're seeing that it's trading now at $50 on the West Texas contract. These are some of the best levels that we have seen in months. As a matter of fact, we haven't seen these levels tested since back in late May and early June. So the crude markets are really moving to the upside. Watch the API data out tomorrow night as far as any draws and the continuation of those draws, but we'll really be watching Wednesday morning's EIA report at 10:30 Eastern time. But crude and Brent, which is the heavier grade of oil that comes typically out of the Midwest and out of areas like Russia. This is up significantly, especially since OPEC came out. Specifically, Saudi Arabia is saying they're going to limit the amount of oil that they're going to export, 6.6 million barrels, and Nigeria, a non-OPEC nation, but still one that has a significant sway in production, said that they will hold to and adhere to the production cap of 1.8 million barrels a day. We'll see if this all basically plays out. Also, watch the Chinese markets overnight, folks. There is a lot of potential clamping down by the government that's starting to ramp up as far as the extension of a lot of these firms that went out and expanded their balance sheets and started buying a ton of assets outside of China. That's really getting clamped down on and has been for the last 6 months. We've been talking about this since December of last year, but it's really starting to ramp up. The Chinese are starting to infuse quite a bit of capital into their personal markets, both on the mainland and in Hong Kong. I want to watch that very closely. That could continue to put a stress on the U.S. dollar, and we'll have to see how this plays out. What has been moving to the upside continually is copper. Watch this non-ferrous metal. This is a great barometer of growth in the materials and infrastructure areas. If copper continues to go up, that's a huge positive. And since we saw that pending home sales were up a lot higher than expected, they were up about 1.5%. I'm not, I won't comment on that since I'm part of that world, but we're not pending. Anyways, we also saw that personal income and spending are going to be coming out tomorrow. This could start to put a little bit more onus on whether or not these copper area is going to continue to move to the upside. We've been seeing some really solid numbers coming out from pending home sales, from some of the big box retailers, but we'll have to wait and see if we ever get an infrastructure play out of Washington, but copper's moving up to the upside. In the bond markets, I just want to quickly take a look at the bond markets because what's interesting on the bonds, and let me just bring this up right here, is that you're seeing that the 10-year is pulled off ever so slightly, but the yields aren't. It's right now right at its 50 and 20-day moving average. This means that bond bulls, in other words, people that are buying bonds, they're on their heels right now. We're going to see if that picks up on the 10-year side. The 30-year already dipped through. It's already trading below the 20 and 50-day moving averages. So bond bulls, individuals and groups that have been buying bonds. And folks, we're going to be waiting to see what in the heck they're going to do at the FOMC as far as unwinding that balance sheet. There still is no clear roadmap on when and how they're going to really start unwinding this $4.3 trillion. That's going to be a big deal. I think it's a bigger deal than people have been putting some focus on. And I think, again, we're going to watch this very closely because this could actually change volatility that has been trading in single digits at points, now trading at 1030 right now, but in a battle right now. This could turn on a dime. We'll watch this one very closely, but no volatility in the markets at this juncture on a global perspective. But there are plenty of individual stocks, including Apple, which has an IV rank of 88, folks, there could be some fireworks in there after earnings, either up or down. So check us out tomorrow. We'll be talking a heck of a lot about that and much more starting at 7:30 Central, 8:30 Eastern Time here at MarketStream.live. See you then and have a great evening.